Honorable.
Thank you. Just to the auditors, where would I find these items? Was added. This was 1.6.
Yeah, this is just on the face of the reconciliation. The payment in the bank, not in the card, as we indicated. Initially, there were two items that we reported. The receipts part were resolved. However, the payment bit was still outstanding, and that's what we captured under the auditor's comment.
Yes, my question is that payment of 1.6, was it a single payment or a comprised of different items?
This was one single payment, I believe, because if it had different payments, they would have shared the schedule with us, and then they will do the analysis. But based on our report, we only saw one single figure.
In respect of what? Because why I'm asking it seems the transaction was captured at the level of the bank, but not in the cash book, right?
That is correct.
That's correct.
Yes.
So the payment was in respect of what?
Well, as far as we are concerned, we cannot tell. That is a reconciliation issue that the Attorney General need to investigate and give us the details.
Said it was a single payment. It was a single transaction. At least you must be in a position to trace that transaction and know it was in respect of what. Because according to the accountant general, the system should have it, not so. Okay, perhaps I'll direct you to the accountant. Since you've confirmed that the difference of 1.6 is that, can you help us to know what the payment was for?
I want to say this is not, I cannot even tell whether it's a single payment or not. You know, when you carry out your bank reconciliation, you have your unreconciled items, which comprise of receipt in bank, payment in bank, and so on and so forth. So here, a payment in bank not in the cash book, whilst one was 78,821, then the supporting schedule is supposed to tie up with the, you see, you have the draft reconciliation, and you have the supporting schedules, which is presumed or should exactly match the total on the face of the bank reconciliation. So now there's a difference between these two. As to whether it's one transaction or not, we cannot even tell. That's the fact. It's just that there's a difference in the lump sum.
You see, we need to reconcile the two statements. That was my first question. The auditors confirmed that had it been, it was many transactions, you would have disaggregated it. So which means, according to them, they are sure that it was a single transaction. Is that correct?
We cannot confirm that because this was at an aggregate level. So what we saw was the difference. The amount on the draft reconciliation should have agreed with the schedule that was provided with the reconciliation, but it wasn't agreeing. That's why we picked up this issue and reported it. Initially, it affected receipts in the bank, not in the cash book. That issue was addressed, but following the management response, the payment part was not addressed. Payment in the bank, not in the cash book. It was still outstanding as at the time of finalizing this report.
I just want to refer to the auditors for their comments, where you said, we confirm that all receipts were reflected in both the cash book and the bank. However, we still noted differences amounting to 1,692,650 between the payments recorded in the bank, but not reflected in the cash book. So now, this is the issue. Once that confirmation is done, that indeed these are payments from the bank, but not in the cash book. So why is it still stands complicated to itemize them for us to know whether this is a single payment or it comprises of various payments. Because once we can make that determination, that will help. So I think we'll move from here, and for this one, I think we'll tax both the Auditor General and the Accountant General to work on it. It's for both of them, because the information we are receiving from both ends is insufficient.
Maybe you can give us time, we consult among ourselves and get back to you on this issue before we complete this.
I will move to page 54. And 54 has to do with number 2 or reconciled items. The findings reveal that unreconciled items leading to BTL from 2019 to 2020 remain unclear, and thus the audit recommended that all reconciliations have been thoroughly reviewed and signed off by senior officers to prevent undetected errors. So unreconciled items also be promptly investigated and corrected, and that the management also responded.
While some unreconciled items have been cleared in 2021 and 2022, deployment of the pending adjustment is currently ongoing in 2023.
Auditor's comment. We have noted adjustments made by management. However, there still remains unreconciled items totaling $48,729,220 is policies, and $185,917,080 is for payment. Details is shown in revised appendix F.
This was the status as at end 2022 and 2023, 2021 and 22, but further adjustments were carried out, especially with respect to 185 in 2023. So I believe this amount will have reduced as of end 2023. So, but I believe work continues on clearing the pending amounts. We're working on this towards 2025 because these transactions do roll over to subsequent years. So it's part of the ongoing outstanding transaction. This is specific to the special deposit account, special project. Yeah.
Honorable Chair, this is an ongoing issue. It has been reported from 2021 right to 2024. So it's still unresolved. As they have confirmed, they will continue working on this, and then in the subsequent accounts, we'll also confirm. But to what extent did they went to clear these unreconciled items?
That is to comply in 2025.
Yes. Yes, we will make follow-up in 2025.
Do you members any comment? Can we proceed?
No, Chair.
Okay.
Just to the auditors. You said still it is occurring. Can you tell us whether the balance of the unreconciled items as it stands now, is it going down or not?
I think this was confirmed earlier. This is increasing as we speak.
Oh yeah, he was not here.
It was increasing.
It was.
Yes.
It was.
In 2024.
You refer us to Appendix F.
Yes.
You should be on page 176 of the management letter. Can I proceed? Yes, I'm looking at Appendix F, but there also all I'm seeing are natives. Because as a committee, we are also interested to know what are the breakdowns of this. That will save us part of the question we are going to ask the Accountant General as to why, what caused it. But as it stands in Appendix F, we have having the receipts in the cash book and the receipts in the bank. The receipts in the cash book do not appear in the bank account, and the receipts in the bank account do not appear in the cash book, and the net of this is only concerned items. So maybe I'll shift to the Accountant General. What are some of the challenges you are having in regards to reconciling this project account?
Challenges range from lack of description, and sometimes also we have technical issues that is affecting the reconciliation model, but a chunk of it has to do with maybe transactions that are not sufficient in terms of description, and this can be both at the level of the cash book as well as the
insufficient description, which means you don't know for certainty what the transaction was for. Is that correct?
Yes, the unique identifier is not there to help you understand what this transaction entails.
And who is managing this piece of the account?
We are managing it centrally.
You are managing it at the level of
Centrally, yeah.
at the level of the Accountant General.
Yes.
So, which places you in the position of making sure that the descriptions are what? Sufficient for your own input?
Well, it depends on where you're looking at it. Of course, as an accountant general, yes, but we must acknowledge the fact that whilst we are responsible for the GL, the bank is responsible for the bank leg. Also, you can have instances where transactions are also posted from outside AGD. Of course, it's still under our purview, but you could have transaction posted at the level of the ministries, because this is a basket account where this account, and this account is being updated, but transactions are being posted by the different accountants. But because it's a basket account, it rests within the responsibilities within the AGD for us to reconcile. Of course, in as much as you might see this as a huge amount, but I think it's important sometimes to look at whatever is pending, in as much as materiality by nature is material, but in terms of the quantum, it's important to maybe establish with reference to the quantum of transaction or the amount that we are looking at. But I think primarily it's because of maybe sometimes inadequacy in terms of the description of transaction, as a result of, it taking time for us to drill down and do the necessary reconciliation.
So I would propose that the Accountant General provides us a detailed report that will unpack this basket for us to know who is responsible for what. Can I complete?
Yeah.
Because according to her submission, yes, the Accountant General is responsible, but other departments also are posting. Since they are the custodian of the account, naturally it falls within their responsibility the reconciliation. But the key challenge they are having is they don't have sufficient information. Since Appendix F is not giving us enough information to know what expenditures are we talking about and who is responsible for expending them. So I would propose that we ask the Accountant General to disaggregate this 185 million into all the line items that were expended. And if at all there are expenditures that were not incurred by the Accountant General, so that he goes ahead and specify which departments are responsible. So this one would not be an easy task. So since you are very generous today, I would allow you to take that.
That was 50 my 2 days.
Okay. The auditors want to comment?
Honorable Chair, with your permission, I think what Honorable Foreman is asking for, we have those records, but we try to summarize it, because if you put it all in this appendix, it will be very voluminous. That's why we decided to compress or summarize the balances, because these are huge, pages, maybe 50 pages or more. Even one account can go into, 50 pages, like the TMA alone. So we have it. It was provided, but we tried to, because we are reporting, we have to summarize to the users so that they understand what we're trying to do. Thank you.
In that case, perhaps can you give us a brief synopsis as to some of the recurring expenditures in this reconciled balances, so that we can have an understanding?
I think some of the transactions, as they confirmed earlier, there are no descriptions. So they are only balances, dates. So it will be difficult for you to do some reconciliation based on our records here. So we pull it from the system. So you don't have descriptions. It will be very difficult.
So I just do more interventions. And these were actual payments, right?
Some were receipts and some were payments as well.
Just start with the payments. These were payments.
Yes.
Done through the bank.
Exactly.
Were they cash withdrawals or were they paid for entities?
Some were funds transfer.
Fund transfer.
Yes.
Which means the recipient is known.
It's not. It should be known, but then as we only have the document number, the date, the amount.
Yeah, because in as much as I agree with the Deputy Accountant General, if I'm right, that we have to look at the quantum, but for us the value is 185 million, and according to you it's increasing. It's not small. So once the payment is done, the receiving end should be known. That shouldn't be magic. Was it an individual? Was it a business? Was it a government department? We should be able to establish that.
Yeah.
Maybe
that will be at the level of the bank. But as far as these records are concerned, those information were missing.
Because two things are involved here. We can follow the reconciliation of these accounts, now according to you, which is going up, or we can try to establish the expenditures. If they were paid for services, we verify whether those services were delivered. If the services were not delivered, then we do the needful. But as it is, you do not have sufficient description in your reconciliation. Payment is done, you don't know who is the receiving end. So, what are we reconciling? That's my question. Because what was done in 2019 now, the historical facts are gone. You could have heard that from the records. There are no records because there's no description. So now, what are you reconciling? I might be wrong, but for me, we need to follow the money now who was receiving those money. Once you follow the money, it will help you to reconcile the balance. That's my solution.
Yes, this issue of reconciliation, as I mentioned earlier, is a perennial issue in that there are legacy issues as well attached to these unreconciled balances. Because if you could recall, these bills have been upgraded to several versions. They were E7, they moved from E7 to E9, and now to E10. And some of these things occurred maybe more than 10 years ago. So if they want to reconcile all these balances, they have to go back, and that is somehow impossible. So the best thing to go moving forward, maybe we'll discuss about that later. I don't want to preempt the consideration, but that should be something that we discuss once we conclude on this. Thank you.
That is still to see the issue can be confirmed in 2025. Can we proceed to
Chair, what he's proposing is we will need have to sit down and make a determination.
That is at the end.
No, together, not with them. He's just not comfortable saying it on air. So the note there should be, we sit together as a technical team, with accountant general, and make a determination as to what will be the right course of action towards some reconciled items.
And the course of action will be on the air anyways. The course of action will be on the air.
Then we proceed to 18, and 18 will be on difference between the total TV receipts in the individual general area and the total TV receipts recorded under the tax receipts and payments. Those amounts are indicated in the table, and the auditors recommended that the discrepancies should be investigated and adjustment made accordingly. And that the management also responded.
The response is that this was due to report error, and the issue is now resolved. The statement is the same as the addition of the individual BTL receipts.
Auditor's comment. Our review of the individual BTL general ledger against the total BTL receipt disclosed on the revised financial statements on the cash receipt payment revealed further differences. Detail is shown below.
The further difference that was established was after we did the adjustment for the first, we worked on the difference that was identified, but in the process, it came out that there was another transaction that had an issue that resulted this 45. It was a foreign transaction that was not translated when the entry was being carried out. But this was subsequent to us resolving the matter, the initial audit query. And that's the reason why you realize that the initial audit query was 5.8 when at a later date, I think they carried out some further work and this surfaced. And actually we have not had time to work on this 45 because it's like we submitted our revise with the ML and this came at a later date, so we haven't had time to look at this when it surfaced because then we had already submitted the ML. So this is something we will have to work further on to see how we will work on the correction because it has to do with the transaction that was not translated as at the time it was being, or the forex amount was not inserted. It was an entry issue that caused this.
When we do that for the work, would that mean a confirmation can only be done in 2025?
I believe so because we are aware that we just completed this audit recently. So we still have to go back and look at it, but if there has to be any correction, and it has to be corrected in like forward looking, that is 2025. But I believe it is something that we should be able to work on because the balance, either whether it goes over or is a revenue or whatever it deals with, we should be able to do a subsequent years adjustment in 2025, but not in the current.
Any members, any comment on that? No further comment. I'll move to second 57. Difference between BTL receipt in the year statement. On that, auditors noted that the comparison of the total receipt in the bank statement against the BTL receipt in the general ledger revealed a difference of 21,809,361.7. And that the auditor recommended that the accountant general should ensure that all BTL funds received during the year are posted and the DL are reported in the financial statement. And that the difference should be investigated and details provided to the committee for confirmation. With that, the management also responded.
This analysis is being reanalyzed by the ADT team, and the result will be provided to the audit team shortly.
Auditor's comment. No evidence of analysis was provided up to the time of finalizing this management letter. Therefore, the issue remains unresolved. Management.
We actually had an analysis of this. I believe it was an oversight providing this to the audit team. But basically, if you look at the transaction that made of this difference is as a result of some of these reversals that would come back to the account. Because the way we are treating is that when funds are returned from like the commercial bank, when it comes back into the account, usually we do not go back and capture it back into the cash book. We will do a transfer because the chunk of it will be related to, like, if there's a wrong BBAN or for whatever reason the bank returns the money, it is not coming back. So the chunk of it, or 90% of this, is as a result of transaction coming back that we do not capture back into the 1922 to acknowledge it, but we would now do a transfer from the bank account directly into the beneficiary's account. That is as part of the correction or subsequent action for transactions. But like I said, my team worked on this analysis, but I believe it would have been due to pressure that we did not provide this to them. But we still have the analysis of the 2021 difference or reports for this query. And we should be able to provide it to them. Like I said, this was not provided during the audit. After the time of them finalizing it.
You should be able to provide now, provide
it. This one is readily available. We should be able to submit to them the analysis that was carried out by the team.
Yes, readily available. That's what I'm saying. What do you can provide now?
During the course of this week, we should be able to fish it out and provide it.
Upon provision, the auditors will look into the purpose accordingly. Any comment? Can we move to page 58? In appropriate creation of BTL project accounts. That was noted by the auditors. That they recommended that the management investigate and almost all accounts that will not fulfill the BTL criteria, and that the management should also adhere with details of the law and put adequate control and so actually control that includes enforcing compliance. With that, the management also responded.
BTL is not only limited to projects that are not budgeted. The scope of BTL is beyond just project, but it's also used to manage funds budgeted but that are set aside for certain activities. Attached are details of analysis of the BTL and the basis for their usage in Appendix E14.
Auditor's comment. The Public Finance Act 2014 permits the creation of BTL account for the specific purpose, purposes with ministerial approval, and it is expected that these accounts are properly authorized and that expenditure aligned with their intended uses. During the audit, explanation for each BTL account were requested from the Accountant General. However, some accounts appear inconsistent with the BTL definition, prompting the need for further clarification. Management is required to provide supporting documentation, such as ministerial approvals, to substantiate the creation and purpose of each account. Since no such documentation was provided by the audit conclusion, the audit team could not confirm whether the recorded revenues and expenditure comply with the intended purposes, leaving the matter unresolved.
Mr. Chair, for this specific query, I would kind of request that the auditors provide us with the specifics of those accounts or those details they want us to substantiate, because we provided in Appendix A a list as part of the audit. So I'm not sure of the ones that they're okay with and ones that they're not okay with. So provide us, because if you look at the BTLs within government, aside the project, we're also maintaining BTLs for funding that is approved by an act of parliament. You have such. So we will request that they discount and give us the exceptional list, then we can work on it, because this appears to be a blanket query on the entire list. I'm not sure whether that is reasonable to ask.
I will chair. The list was provided as indicated in our finding in Appendix H. Appendix H. H. Yes. 179.
Appendix H.
179. One 178, sorry.
78.
Yes. H.
Laura, have this addressed your concern?
Not fully, because just looking at it at face value, we all know that the Fisheries Development Fund is by an act of parliament, and the National Forestry Fund also is by an act of parliament. And for these two, I believe it's public knowledge that they should be allowed to use this money because it's authorized by an act of parliament. So that's the reason why I'm asking that they should give us the exception, because some of the BTLs are very obvious. The sand mining, I believe there is an MOU that guides it. We'd be happy to provide, but perhaps maybe, hence the list is not long. We should discount the fisheries development and the NFF, because those ones are just by default authorized in as much as, but they should be self-retained revenue. So we can provide you with the rest, with the exception of maybe few, which were used to facilitate payment. Or maybe allow us to provide you documentation for this, besides those two.
It allows you to have documentation on
The others, after having discounted the National Forestry Fund and fisheries development, because those are already authorized.
Which one should be exception? That is the National Forestry Fund
And
Fisheries Development
the
Fund.
fisheries development.
Then the rest, the
Yes, the sand mining, we have the MOU, which was authorized by the Minister of Finance. And the others, geology, that is, all those are on the sand mining. They're all sharing the same documentation. But the state guard, it was just to facilitate payments. It was money that was appropriated already. So the reason why they have this BTL was to ensure that anytime the security is ready for deployment, that funds are available. So usually what they do is they expense this from the budget, set it aside so that they wouldn't have to subject the process to a cash allocation, which is usually tedious. So that was the rationale behind, and I think it's indicated that facilitating the payment of allowances to security officers, but it was not outside of the budget. It was, anchored on an appropriation, and that is where the expense from. Then the others we would have to provide you with the internal audit, and the others we provide under MOISI, the documentation.
let's take those that you feel you can provide in this document.
So we would provide you with the one for sand mining,
Mining,
and geology. It's one document.
yes.
And also the MOISI gateway was approved by cabinet. We have the cabinet approval. Then the MOISI international gateway, yes. So the fisheries development and the forestry, I believe they have the act. It's public. It's a public document.
The ones that you feel you can provide the documents, let's list those ones. And then we get to the auditors.
Okay. So it's the sand mining and the MOISI international gateway, and the state guard. I'm not sure. Yeah, that is going to be the request from OP to for us to operate this BTL, and the internal audit, as well as the digitization of endangered archival material. Those ones we will provide the request from the ministries.
Can I say that the one that you can provide the documents are state guard, internal audit, the MOISI international gateway, and the sand mining and geology.
Yes.
The ones that are in question will now be limited to utilization of endangered archival material, as well as National Forestry Fund and the Fisheries Development Fund.
Mr. Chair, for those two, the National Forestry Fund and the fisheries development, I'm saying they should not even form part of this query, simply because the funds that we are managing under these projects are the share for the ministry. And this is approved by an act of parliament, so it should not have formed part of what should have been queried.
Yes, I will get back to the auditors. The one who you can provide the documents, that's what is first listed or mentioned.
Okay.
The ones that are not part of the ones who can provide the documents are the ones I mentioned. The other position is that those should not be part of the
Query.
list. Huh?
Yes.
We'll get to the auditors. Yes, audit.
Madam Chair, I think we can also we will refer the AGD and team to their IFMIS accounting manual. That guides the process, how they should deal with BTLs. It's clearly spelled out that this should be only for projects, not other accounts. So basically, based on what is in the Constitution and also the IFMIS accounting manual, we gauge them based on that and realize that some of these accounts are qualified to be treated as BTL.
AG.
Going back to your submission to say, you're saying BTL accounts created for project not budgeted for are not included in the government revenue and expenditure. Here, in as much as you're going back to our accounting procedure manual, but the substance of the matter is that for the sand mining and the National Forestry Fund, we all know that that their share is not appropriated. So whatever is collected based on an act of parliament, that percentage is available to the ministry. So basically what we're doing is we are availing this functionality, which is the BTL functionality, to allow them to expense this. So now, because for me, the query should be using monies that should have gone to the perhaps CRF, or expensing it as a BTL, as opposed to having this money to go to the CRA. But if you look at these two line items, they're authorized by an act of parliament, and all we're doing is to allow them to use this functionality to expense or to avail the funding to them. And that is what we've indicated.
Can I get it right? Which one do you say that act of national action?
The Forestry Fund and also the Fisheries Development Fund.
You say those not from part of
the query, because this is their share that has already been authorized or is already authorized by law for them to retain and utilize. We're just using the BTL to facilitate their accounting and reporting.
Or do you still maintain your position that they should come part of the query?
Honorable Chair, I think the principal witness have already confirmed some of these monies should have gone to the CF before they are expended. So based on that, I think you've already agreed to our finding.
Based on that? Yeah, can you what you say?
Yes, I was just saying that based on her submission, she did mention that some of these monies were supposed to go to the CF, the consolidated fund, before they do any necessary expenditure. So based on that, I think she have already agreed with us that some of these accounts aren't qualified to be BTL in a nutshell. Thank you.
Mr. Chair, I'm going to differ from Boubacar. That is not what I actually meant. Because if you go back to the definition of self-return revenue usually is not appropriated. If you go to the budget, national budget, there is no way you will see an appropriation for self-return revenue. So the monies, all we're doing is we're using the BTL to allow them to receive and as well as expense it. So because it's nowhere. If you take it to the CRF, in fact, currently we have that problem. If you take it to the CRF, then you'll be constrained in availing this to them because you will need a budget to avail the money. And by law, it is self-return revenue. So all we are doing is to say, retain this money, use the BTL so that we're able to report on this. And that's the spirit behind allowing them to use the BTL.
I still disagreement regarding part of the query. The follow slide will have the committee.
I think it's an important point, and which requires the attention of the committee. Okay? Beyond the accountant general and the auditor general. She raised a valid point that these service revenues are not appropriate. And if that is so, then as a parliament, we have a role to play. Because if you look at the allocations at the end of the year, they do not in any way indicate the internally generated funds, which, I mean, to me, is a huge gap, because we should have one basket. The position of NAO is clear, and that is my position. As a nation, you should have one basket All the monies we are having, let it go to the basket first. Prioritization be done. It doesn't matter where it is coming from, institution A, B, C, or D. The framework, the structural framework to do that prioritization and the allocation can be left to the ministry. So what we need to confirm first is, these self-raised revenues, are they appropriated or not? And the simple answer here is, all revenues of the government. It is saying all funds. Now, it's up to you to define what these all funds are. Are you limiting your definition to what is being collected by GRA alone? If that is the limitation you are taking, now you are excluding other important organs of the government. And for me, I believe that definition goes beyond GRA. It is saying all funds.
Yes.
All funds. That includes the entirely generated funds. Yes. So now, whether you are seeing them explicitly on the face of the budget or not, that's another question which needs to be asked. Whether projections are done on departmental lines as to how much revenue they believe they will be able to generate within a year, that is another question. But as it stands, and what we need to do is to ensure that all funds goes into that simple basket first. Departments shouldn't be given the right to retain them. No, they should not be given that right. Let it go to the basket, and later you can what? Reallocate them based on the priority of the departments. That is the position, Honorable Chair. So, but first, as a committee, let's answer those questions.
Yes,
from appropriation to the generation of those funds.
Can we just clarify this thing? He's right.
No.
If you look at section 150, subsection 1 of the Constitution, it's actually telling you that you put all the revenue in the revenue fund. However, it gives an exception on subsection 2. It's telling you, notwithstanding this that is supposed to go there, Parliament can create, through an act of Parliament, can create a special fund for the retention and usage of that particular department. And I think that's where the forest fund comes in. That's where the fisheries fund comes in, because of that exception in subsection 2. That's exactly what's happening. In fact, like I was arguing with my colleague the last time, this is exactly where the self-revenue fund actually utilizes is able to be done because it's constitutional on that subsection 2. That's exactly where it is. Now, the issue now would be like, how feasible the process and all that kind of stuff. But for me, I think that is more of an administrative issue. But as far as the legality is concerned, I think it's very legal, based on subsection 2 of section 150. That's where the issue is here.
Of course. Thank you very much, Chair. It is
subsection 2, section 150 of the Constitution, subsection 2. That's where it gives an exception. Of the Constitution.
Chair, and section 22 of the Public Finance Act, is good that now members are seeing my point. And not only that, that's why I said in the budget debate that the appropriation bill is in conflict with the existing laws of the Gambia. There should be a separate column, that will report all these departmental self-raised revenues and these extra budgetary funds that you are talking. And even those extra budgetary funds should be laid before the National Assembly for retention and expenditure of those funds. And these are underreported. That's why we don't still know our potential revenue of this country. And these are all as a result of, non-compliance. Thank you very much.
Honorable Chair. Honorable Chair. The fact of the matter is all revenues have to go to the consolidated fund. That exception, no, let me now. Just allow me to now. You see, that exception which is given in subsection 2, requires an act of Parliament, but it doesn't negate the substance of the law itself, which recognizes that indeed all funds have to go to the consolidated fund. As a committee, what I would propose and advise is, let's work with our legal team and look at the intent of subsection 2. And if need be, we amend it You see, the main reason we cannot properly plan as a country is there are so many baskets. So many baskets. And sometimes these internally generated funds are even more than the budgetary allocations that are given to departments. And this will be the same departments that will come to Parliament, lobby through their respective committees and tell them the allocations given to us is insufficient.
They have money somewhere.
So I strongly believe that what we need to do, and we need to do immediately, is to engage the office of the clerk, make a review of the provisions of subsection 2, and then ensure that we have one single basket. If need be, we delete it totally. Let us delete it. Okay? Let everything go to appropriation.
No, it cannot be, Chair. Those two projects there, no, it cannot be.
Honorable, allow me. I've said my opinion. You are right to say this. Why I'm saying is, what I'm trying to say is, subsection 2 is giving them the powers to retain it. Not so. It's for retention.
No. Subsection what? 150?
Allow me to make my submission to the chair. Yes, come in, chair.
Yes, what I was trying to advance, there's also this how to see that the way that is being addressed further. The management has to further respond to the further comment by the auditors, and then we make assessments what improvement has been made. It appears the management say they can provide documents for all the other funds except two, that is the National Forestry and the Fishery Development, based on what they provided at the legal parts of it, to blend their position. And this was not agreed to by the auditors. So the rest now depends on the committee. As alluded by Honorable Fofana, we are not concluding, we are not taking this on here. At the time of preparing our report, we will do those consultations and then amicably resolve to the decision that we're supposed to take. That will be advised by our legal team as what decision we're supposed to take surrounding this. The legal provision that is made, and then the bottleneck that is also there, how can we address that as well? And all those recommendations will be advanced when we are preparing our report. So the position here is what the accountant general can provide those documents, you provide. And we take note of your position, and that position will be addressed when we are preparing our report. Is that okay, honorable members?
Yeah, very well.
Yeah.
Section 150 sub what it says.
No, what I'm saying here, we know what the section says, but we don't conclude on what the section says.
The only problem is that
Allow me.
I just want to guide you.
Sorry, no, yes, I'm also guiding you. I'm also guiding you. Yeah. I mean, legal issues are advanced here. Legal opinions are made. So we also have a legal team that will be advising us. Yeah, we don't put aside any opinion legally, but we also have a body that will also guide us legally. So can we raise that case? And then instruct the accountant, the one that will feel you can provide those documents. We'll give you a timeline to provide those documents. And we'll be fortnight. Fortnight. Huh? Is that okay?
I also wanted to say it's important to know what is happening as we speak, the chair. Like this information, following the deployment of the payment gateway as we speak. Because government revenue is going into the banks. As we speak, all the revenues are going to the CRF. So as to how they will get their share is another matter. But in fact now, the process has changed. From the administratively, it has changed. The entire money is going. The question will be, how do we ensure that that share of theirs is provided? Perhaps that will bring back to a table to say, perhaps we might have to look at the share, make provision for that in the appropriated budget. So that would in fact solve the problem, because from last year up to as we speak, everything is going. We are not putting aside because the gateway is not allowing to segregate because it is updating the image automatically. So whatever you see under those ministries as revenue, it's holistic.
They have no share.
So the issue is resolved.
They
The
have
money belongs to the government.
So, I think he's talking to you. Abu, are you talking to you?
The minister is here.
Yeah, exactly.
It's one of the same.
Yes.
No, we want to, section 150.
Oh, yes, we'll address that. When we are doing our consultation with the legal, we'll address that.
That this issue is now coming to light.
Yeah, okay.
When I wanted to raise it here, some of them were telling me.
But no one here is justifying what we are trying to say. In fact, we are being corrected.
This one.
We are correcting him now. Everything you said before was
Those
error.
departmental self-based revenue.
Yeah, let's have one meeting. Coming to Australia. Let's go to the next issue, case 62. 62. Difference between adjusted cash books and note 15. And the differences are indicated in the table. On that, the audit recommended that management be able to make the necessary adjustments and details for this to the audit team for review. With that, the audit also, the management also responded.
The difference is caused by treasury management software capturing transaction in dollars instead of USD. And however, this issue has been worked on. That is our current software.
Auditor's comment. Management effort is noted. However, differences are noted between the adjusted cash book and note 15. Details are shown below.
AG.
Allow us to go back because from the time that we submitted this, we could need to go back and verify why we still have the difference. But we know it was a technical issue that has to do with the system, the reconciliation system, capturing dollars as opposed to USD. But as we speak, I can't tell. We will have to go back and check.
Okay. You can also respond to that. Then we will give your response to the auditors. If editing changes, well and good. If there is nothing, then we take that we should remain on the search.
Excuse me.
So that, can that be?
Okay, sir.
We give you 2 weeks for that as well. Yeah?
But yeah.
Well, the submissions on those things that they say they can adjust.
No, what I'm saying is, I think if you look at what their response is anything to go by. They said this difference was caused by TMS capturing transaction in dollars instead of USD. I mean, for me, this is just a very simple thing. I don't know. I won't call it carelessness, but I will call it something very close to that. Because again, you have a system that's giving you what is in USD, this one is in dollars. And then, I mean, those are just too basic. And again, when you do system testing, that is one of the basic things you really need to capture at the onset before anything. So,
Can I put clarification on this? Honorable, this was not something that was there from the onset. Something went wrong because this system was being used since, for a long time. So that was not something that was there before. We realized that it was something that was developed at a later date, where we realized that here, you look at the cash book is in USD, but when the system picks it up, the system will bring you in the treasury management software the dollars equivalent. So it wasn't something that was there from the onset. I believe
something was happening. It just changed.
Along the line, something went wrong. But it was not there from the onset. It's not because it was not UAT, but it surfaced at some point. Maybe they were trying to fix something, and it affected the configuration.
Somebody must have done something.
Okay. Let me proceed. Go to 66.
Chair.
Just have an observation. We've agreed with the Accountant General that this would provide some evidences for the audit team. But we'll appeal to you so that all these evidences, once they are gathered, they are sent to you and then it will be forwarded to us.
You want to send them to the
And not piecemeal also.
Yeah, that's right.
Everything, yes.
Almost 2 weeks. 66 is about disclosure of subscribed shares in the financial statements. And that was noted by the auditors. And the table is indicated.
Yes.
With that, it's recommended that management review and the financial statements include details of the shares, and also the financial statements should comprehensively disclose all relevant information regarding the government's equity participation in development banks. The management also responded.
The response is that the information on these shares were not available at the time of collecting the financial statement. However, this information is available and we have disclosed this as part of the revised efforts.
Comment. We noted the disclosure, however, the shares disclosed in the financial statement. What's on the annual report are different. Details shown below.
Just looking at it at face value, I want to say some of the amount, the disparity is there because the amount were not actually translated. For instance, if you look at the basic, 17.5 euros, 17,500,000. As per shares in the financial statement is 485. So what we did is we actually translated this in GMD. And as per the report, we'll give you the natural amounts before translation. So I believe this is what is warranting the chunk of the difference. And the same thing with basic is 9.7, that is unit of accounts. So we actually had a rate applied to it. So I believe we will have to go back and check, but just looking at it, because the auditors did not translate this in GMD. They looked at it face values.
We will confirm this with the AGD. Thank you.
Members?
Yes. Chair, just to take a cue on the last part of the Accountant General's submissions. This year, don't you have share certificates for it?
Yes.
No. But you are rushing to give to BS.
Yeah, I'm handing it over to the permanent secretary.
Mr. Chair, we usually do have certificates upon request. We can have those certificates. Most of the time, the problem we have with our share contribution is that because of constraints in terms of resources, we do not meet up our end of in terms of paying up those shares. But we can request on a regular basis to be able to have what our share is and what is the value equivalent in dollars, which can be translated into dollars upon request.
Because the main reason I'm asking this, if you look at the management response, it says the information on these shares were not available at the time of collecting the financial statement. However, this information is available, and we have disclosed this part of the revised financial statement. It was after this that the auditors realized that there is a discrepancy. And listening to her submission now, she is telling us it's because of conversion. So I strongly believe that whatever information that should have been given to the auditors as of the material time, the conversion should have been there. Whatever rate you were using, the rate should have been there. 1,000 ordinary shares at this, 2,000 ordinary shares at that, whatsoever. If at all it is in value, is in safer, I don't understand. You must have a conversion rate because they can only compare like with like. But now, the submission is, although the financial statements are in dollars, but I'm not sure what the share capital is in.
The currency that is in, whether it's in unit of accounts or
Accounts or what?
euros.
What is the share capital in? Is it in CFA, in euros, or what? Or is it in units?
it depends for each of them. Different institutions have different currencies. Let's say, for instance, African development banks will be using units of accounts. Others might be using safer. Yeah. So, but I think here you're absolutely right in that when we were providing the information, we should have also provided the equivalence in GMT as well, so that at least you'll be able to compare like by like. But I think these are things that we'll take note of and make sure that at least at the material time that we request all information from our development partners that we are paying subscription to at the end of the year. What is our current share capital? So that at least when they submit those things at the auditing process, we will actually be able to share that. I think going forward now, our team, let's make sure that at least all of the development partners that we are working on this, at the end of the year, let's find out, let's get that share certificate at the 31st of December.
Chair, I think peers have taken that commitment. We can move.
For 2025, you will get that. Yes,
It's already due there.
Money is due.
no, but now you're requesting for December 2025.
Minister, no.
I don't know, let's try to order for
Yes.
for December 2025.
Chair, yes, with the NAO, when you look at the audit account, I will look at the audit accounts of the bank itself, for example, Bank Silo, or because I think you should be able to get it from them as well. For example, the Airports Bank for Investment, and also, so I don't know whether you're communicating directly or you are just depending on what they give you.
No, all this information were requested from the Accountant General. Whatever was provided came through the Accountant General. Probably they liaised with Minister of Finance and they provided this information and it was forwarded to us. We're not writing directly to the banks.
Chair.
Sure?
It's 4:30.
Sure?
Yes.
Sorry, I think we skipped one item, although it was rated medium, but I think it's still significant. That is item number, where we have page 64.
Okay.
Difference between total individual cash books and note 15.
Okay.
Yeah, it's rated medium.
64.
Yes.
Difference between total individual cash books and note 15.
Yes.
Differences are indicated, and the audit recommended that management is going to investigate the differences and make the necessary adjustments, and the management responded.
We have computed the difference between the total individual cash book of the project and note 15 as follows. Individual cash book 281, note 15, 312668. That is our computation in Appendix A 35. This area has been engaged in the difference between their project account and note 15. The difference between the special project is noted and will be engaged in terms of writing it off, and the cash book does not represent the actual balance.
Auditor's comment. We know the difference amounting to $20,869,032 between the total individual BTL cash book of the special project LLC and the balance disclosed under note 15 of the financial statements. Additionally, the difference is noted for the special project USD and the judicial special project accounts remain unresolved. Detail is shown in revised appendix I.
We have further worked on the difference of the 20. We've been able to establish what actually caused the difference. That is between the individual cash book and the project fallacy. And this is mainly attributed to the treatment of withholding tax in the system. So we are working on having this corrected in 2025. We will still have to come back to you on the special project, because from our analysis, the cash book appears to be overstated. So we will be engaging you during the course of this month or early next month, for a possible writing down of the cash book balance, because it does not represent the bank. I believe this were as a result of legacy issues that roll over from year in, year out. But ultimately, we would have to have this written up, because if not, it would continue to cause a difference, which is not, which we cannot explain. So that's the update on this.
We are working on to correct the difference in the 2025 report. Can we say that we confirm in 2025?
Yes.
Auditor?
Yes.
Yes, if it is adjusted, we can confirm, but she mentioned about writing off. I don't think we are the authority to confirm writing of balances. That should be another institution, probably the National Assembly.
It's their own institution. It's their own. Yeah, PS is here. PS will have.
The confirmation 2025. We go back to 23. That has to be 69, page 69. Difference between principal payment
It's the honest time.
on Meridian.
Are we done with that?
Yeah, please, sorry.
Yes. No, I'm just asking whether we are done.
Yeah, it's something supposed to be confirmation. They said they are working on what is in 2025. If the correction is done, then it's supposed to be confirmed by the auditors.
Okay.
Okay. Is that okay? Are you hungry?
Huh?
Are you hungry?
No. I have a good lunch.
So 90 or 69 is on difference between principal payment and Meridian and financial statements. Those differences or statements are indicated in the table, and on that basis, the auditors also recommended that AG and the Trade Management Unit has been raised to ensure that the figure reported as external public debt agree with the system data on Meridian and the database. And therefore, the management also responded.
Chair, I will hand over from now until another matter comes up, different from the debt, to our able subject matter specialist on that to respond to this. Thank you.
With EOC,
Is here.
Thank you, my colleagues will take us through.
Some parts are due to the
can you get the mic? Sorry.
due to the reconciliation exercise conducted in 2022 for all loans recorded in the system and are periodically quoted in the FME system, even that the face value is, am I in the correct?
5.2.
Oh,
My name is the difference.
5 point,
Do you see?
the exchange rate, sorry.
3.5.1. 368.
16, okay, yeah. The difference is due to the exchange rate. The rate used in raising the voucher is different from the rate used in the meridian system.
No, that's 69.
So that's the one that I have in here.
You have the, where you take 69.
Yes.
Yes, I'm at 69.
Yeah.
Yeah, you're supposed to read the management response.
That's what I'm reading. I don't know, maybe I'm having a different document.
No, you got it. What?
Yeah, it's the same one.
The difference is due to exchange.
It said the difference as the result of the same.
Yeah.
Yeah, okay.
Auditor's comment. The exchange rate used in the transaction is expected to be the same as that of the rate captured in the meridian. The rate was not adjusted in the meridian, hence the issue remains unresolved. See details below.
May I come in?
Yes, you can.
Some of the rates were adjusted, but some were not. Because it's like if you want to go back and adjust the rate at that particular time, that is 2021. And it means that all the payments we reconcile from 2023 up to date, we have to undo everything, the entire system. But it's like if you said 2022 has an issue, or one of the, like the system, the way the system is built, if you say 2021 has an issue, you want to reconcile that payment, you have to undo all the transactions that have been done after 2021. So this was the issue we explained to the auditors. Some of them we rectified, but there are few we could not rectify them in the system. Because what happened, the time we are raising the payments, and then the time they will reach the central bank, it may have 1 or 2 weeks difference. And now central bank is normally they publish exchange rate daily, and then we follow that. When they publish the exchange rate, we just enter that exchange rate in the system. When we are raising our end, like if I'm raising today, I use today's exchange rate and I raise it. So it may take 1 week or 2 weeks to reach accountant general, at the central bank level for them to process the payment. That is one of the problems. There is another issue also we notice. It's like, one of the payments here on the principal payment where you have the 990. When they send us the management letter to review it, we notice that there are two domestic debt payments, part of this 990. If you remove it, you will get 1.33.
If I may just add on to what my colleague was saying, I think during this time, we were not really reconciling with central bank in terms of what we were raising from our end. When we generate this payment, we send them to accountant general, and perhaps it will take maybe a week or more before central bank reconcile it or externalize it. So when they externalize it, we were at the time relying on the exchange rate that we use to raise these vouchers. So those were the same information at the time we used to update our meridian. So you realize that there is always some timing issues in terms of exchange rate from different angles. But when auditing is being done and they raise this issue, we said it's about time that we try to delay the update of the system until the central bank does the payment, so that will be using the same exchange rate. So you realize that currently we are no longer facing this, but this was the issue of the past. It was like a legacy issue. But when the audit and they were picking some of these things, definitely they were really corrected. Okay.
Mr. Chair, I think the first point that he raised is the major issue that we have in terms of timing between the vouchers being raised at the level of DLDM, getting to accountant general processing it from that end, it gets to central bank, and the payment being made. I think that has been the issue, and this is where the exchange rate loss at game comes in. That's where it comes in, because the time of payment, depending on what exchange rate is actually happening and what has been processed, that's where you will have these exchange rate gains or losses. So that is our main issue. Unless and until we start having these externalized being done through EFTs, we will not be in a situation to be able to have those exchange rates been corrected. It's only when we start making those payments similar to what we are paying in other aspects through EFTs, we will still have that challenge, because it will take, sometimes it can take a month, up to a month even for some of these payments to be externalized, because it also has to do with whether you have the resources in your account for you to be able to externalize those payments. If it comes towards the 23rd or 24th, when we are having salary payments, we usually have to put a pause on them and make sure the salaries are actually paid before you can externalize, before you pay the external component of things. So those are some of the challenges that we are grappling with, and we will continue to grapple with until we're able to resolve the situation. Thank you.
Any other comments?
Honorable Chair, I can confirm that there has been a marked improvement on these findings, because in 2024, I think we didn't have an issue of this nature. It was resolved. But in 2021, 2022, it was recorded. But in 2024, there was no finding of this nature.
In 2024,
we didn't report it on this, meaning that it was addressed. Yes.
so the airport was resolved as of
2024.
Members, if you look at the significantly, as he indicated earlier on, the difference was 857 million, and it was reduced to 12.1 million. And in according subsequently in 2024, no case of suit was reported. So we take the account result in 2020.
Just to add, I think the submission from the gentleman gives us the solution. If they are doing timely reconciliations, it will come. Once you receive, from the end of the central bank, and then you reconcile that against your meridian, the difference is just either the forex gain or a foreign loss, and then eventually it will go off. So I strongly believe it should not have been there in the first place, but they've identified it, because they admitted to the fact that previously reconciliations were not being done. But since they are doing that now, we don't expect it to come. So I believe this one is okay.
I will proceed to 7. Young members is 440. We are still halfway of 2021.
Yes.
And we have 22, 23, and 24. And by our program consideration ends on Thursday. And we have seen half of the day, there are 2 more days. Yes?
So I think you've done well. If you took the accountant general and the auditor general to bring accounts of 2021 in 2026, it doesn't matter whether you can finish in 2 weeks. Even if you finish this in 2 weeks, it's a landmark achievement. For me, there's no need to rush it. Let's do it efficiently.
Whether we can
Let's close now. Yeah, let's close now. We resume tomorrow. It's 4:30. That's okay. Yes, but I propose we be closing by 4. This requires complete attention. So if we overdo it, fine. You can go very fast, but the quality would not be there. Yes, Chair.
Can I suggest something, Mr. Chair? If you permit me. I think, with your permission, Chair, I think I agree with Honorable Fofana in that this is my first time coming through this. It's a learning curve for us, but it also helps us to make sure that some of the findings that we have here, we do not repeat the same mistakes going forward. So the idea is not to rush it, but the idea is also not to overwhelm individuals that are participating in this process. If it means that we take, I don't know what your bylaws are, if it means taking another 3 weeks in order for us to do it, let's do it, but let's do it right. Because the testing or the litmus test will come in the 2025 accounts that are coming in. And the idea is for some of the things that we are actually encountering here to be able, for us to be able to resolve them in the current financial statements that we are preparing so that it doesn't reoccur. We are hoping that going forward, we will not have pages of almost 200 pages to go through.
Yeah, can we consider we are going to close by 5 p.m. We still have 15 or so minutes. Yes. Okay. But we go to page 71.
But
Honorable Boy is saying something.
I'm going to say, but if somebody is supposed to go to money again, don't rush them.
Page 71, there's some difference between the interest disclosed in the narration and the amount paid as per the bill. The amount indicated is 3.6 billion, and on that, the audit made recommendation that the management should ensure that the regular reconciliations are performed, and that the variations should be investigated and all payments are verified. The management also responded.
It was tough to match up each payment from the start of the loan with the amount on the bill because our creditors' business calendar didn't always line up with ours. But from now on, it should be minimal since we have fixed most of the issues in the system. May I explain a little bit on this matter?
Can you allow the auditors to first then?
Auditors coming, the issue remain unresolved. However, the matter will be confirmed in the subsequent audits.
Okay, you want to explain?
Yes. This other problem is pertaining to the interest calculation. The issue is under 2 different portfolios. Like the first one is the business calendar. Like sometimes in our system we assume that maybe Senegal will have a public holiday when they will not have, or they will have a public holiday on certain day by using their calendars, the one they publish. All of a sudden they add another public holiday on their this thing, unannounced public holiday which are not published on the calendar. So when we are calculating interest, we have to consider the number of days. So the difference which normally causes the number of the difference between our interest rate and interest amount and the interest of amount of the creditor is because of sometimes it's the number of days we use to calculate the interest rate. That is one, and there are some of the creditors. We have some loans which are disbursing, so they can disburse, and then we didn't receive the disbursement. So they will use an amount to calculate the disbursement, the interest on that DOD, when our deal is different from there. Because before 2024, we used to have 2 months to 3 month lag before we receive disbursement actuals from the creditors. But now, since we went for a reconciliation in 2023, is it 2023? Yeah, 2022 and year, most of the issues we are facing have been resolved. Sometimes every end of quarter, we do request for disbursement actuals or actual payment from them to reconcile in the system. Most of the issues we have in 2021, 2022, we will receive lesser than in 2024 towards 2025.
The audit confirmed that the matter to be confirmed in 2025. It's a subsequent audit, precisely I will take 2025.
Yes, in fact, even 2024, this issue was not recorded. It has been it was addressed here in 2024. 2024, yeah.
Problem solved.
So that means it has been resolved. We move to page 75, transit accounts not clear at the year end. And that will be found in appendix K. On that, the auditor recommended that the accountant general should provide explanation as to why these transit accounts were not clear at the end of the year. May you respond? 75.
Yeah. I think we had discussed a lot on this account, this transit account. Not specifically this one, but I think we've discussed until we are talking about the behavior of an account, the characteristics, something like that, which needs to be zero at the end of the year, something like that, along those lines. So I don't know if there's a need for us to discuss again on this one, but I think we understood that what was happening, the behavior of some of them that they need to look at, and they may be correct if there's a need. So that at the end of the year, at the close of the year, then the zero, then move into the normal. So I think we've already discussed those ones already. So for me, I think we should move to the next one. Well, before I want to go, so.
Yes, I tend to agree with Honorable Bo. However, I just want to emphasize one thing. I think most of this issue would be addressed if the Attorney General, and of course ministries revive this activity of doing month-end procedures and year-end procedures. They will clear all these hanging issues because this was absent. That's why some of these things are recorded. But we've also confirmed that there was a circular sent to ministries and departments that this will be revived now. They will be doing month-end procedures and year-end procedures. Thank you.
Mr. Chair, I think this is addressed.
Auditor,
Sorry?
do you consider it to be resolved?
No, this is not yet resolved because it's appearing throughout from 2021 to 2024.
Mr. Chair,
And that is still remain an issue.
I think this is where we also have stated that going forward we are going to have month-end closures. This will, to a large extent, will also help us because we seem to be having a lot of problems, even in terms of the reporting on the system, because we do not have month-end closures. So once that is institutionalized, will actually help in resolving these things.
Month-end closure.
Yes.
Yes, I know it happens, but look at it.
No, but if you have the month-end closure, it helps you in the reconciliation aspect of things. By the time you come to December, you will have those things already sorted.
Even if I call you, this is one more than I is. No. By February, you can be reporting on January. But at least.
Can we move to page 81? Page 81 is about no evidence of fiscal risks. assessment performed on SOEs. On the table indicated the affected SOEs. On that, the audit recommended that the management should ensure that the details of the Public Finance Act adhere to at all times. The management responded.
I'll hand this over to PS.
There was no fiscal risk assessment conducted at the time because Morphe staff did not have the required capacity to conduct the assessment. Morphe recently engaged the IMF through technical assistance to help build the capacity of the Debt Management Office and the SOE Directorate on fiscal risk assessment. Currently, fiscal risk assessments are done using the IMF tool on fiscal risk.
Okay. Auditor's comment. The finding remains unresolved up to the time of finalizing this management letter.
After the finalization of the report, what follows accountant general, any adjustment or improvement?
Oh, PS.
Yes, now.
I think what we have been preparing fiscal risk statements, but it has been on a gradual approach looking at the most troublesome SOVs, i.e. NAWEX and the JGCs. But I think what we are working on eventually will be a holistic approach to look at all SOVs as of now. Coming into force of the Commission, the State-Owned Enterprise Commission, this will also help us in making sure that we have these fiscal risk statements been prepared as well. So hopefully, going forward, we will be able to, this will be of the past.
Yes, thank you, Honorable Chair. Honorable Chair, one of the implications which is being highlighted by the auditors, one is that there is risk that the government might end up paying huge sums of money if the issue is defaulting payments due to a lack of funds which could have been detected if fiscal risk assessment was carried out by Morphe. And if you look at the table, these loans were contracted by GCAA, GAMTEL, and NAWEC. I just want to ask, did the government at any time, after the disbursement of these loans, intervene to pay on behalf of any of these instruments? Have they defaulted in their payments? Any one of them?
Maybe let me go back to, I think one of the gaps that we have also identified is an unlending agreement, which is on top of the pay itself. We have not also been working assiduously on that to make sure that even when we take a loan and unlend it to the parastatal, we have an unlending agreement. That should be the norm. Once a loan is taken on behalf of the country and unlend to an institution, we need to have an unlending agreement which stipulates exactly what the entity is supposed to do going forward. That bit has been lacking, and we are working to make sure that we institutionalize that. In terms of whether we have been paying, yes, there are some loans that we have been paying for certain institutions. Maybe I would say even both GAMTEL and GAMTEL, and also NAWEC as well. You remember there was a point in time in 2019 that an assessment was done where you had the total liability of NAWEC being about 9.7 billion, where the government 75% of that. So the arrangement was some of those loans were to come into government books, for government to pay those ones, and the others would remain at NAWEC books for NAWEC to continue to pay. Even the one that we have taken over from NAWEC to bring to government books, government is also defaulting on some of those things. And that's why we are also working on making sure that those rectifications are done going forward. But yes, there have been loans that have been taken up by government companies and some business.
It's just my last intervention. It's the main reason I asked that question is these institutions or entities were They completed basically to make profit and pay dividend to government. That was the intent. But it's the reverse now. And for all intent and purposes, one have the fervent belief, I would say I have the fervent belief that if these were private institutions, they will make a profit. Take Gamtel for example. Take Gamtel. Or you take Gamcell. Gamcell had supernormal profits in this country. They were selling SIM cards at $500. When neither Africell, QCell, or Commune were born, those companies are thriving today. If Gamcell was a private entity, believe it, it would have been profitable. So, I don't know, at some point the babysitting have to end. They cannot be babysitting the SOEs forever. I know the intent of government is clear because the services they are providing are in one way or the other indispensable. Look, if at all it's the organizational culture, let us change it. If at all it is the people pay us, serve them. There are more qualified guardians, hire them. But they are not paying dividend to government. And now we are taking the much needed scarce resources of the nation to bail them out. I don't see the logic. I'm sorry, but I don't. So Chair, I would propose if at all the ministry can provide us a comprehensive report with regards to this particular laws, which the state stood as a guarantee to these various institutions, and how much have they paid and what are the outstanding balances, so that we can be ready for immediate trial.
Thank you once again. We will be able to do that, provide it, but I think we also have to put things in context. I do agree with you, there is a level of frustration in terms of state-owned enterprises not doing their part. But I think there is also light at the end of the tunnel. In the sense that if you look at the SOE Commission report, I don't know whether you already have a copy of it, you'll see that at least there has been tremendous improvement from 2023 to 2024. I hear the liabilities of SOEs in total in 2023 compared to 2024 has been halved. So we need that there is considerable improvement because the SOE Commission also, with the targets that they are setting for each of these SOEs, it's actually making tremendous inroads in terms of getting state-owned enterprises, not only to deliver the service, but also to be profitable as well. So I think there is a lot of work that government is actually doing in actually bringing these SOEs back to make sure that at least, not only, like I said, not only do they provide the services that the people need, but also do it at cost effective so that eventually they are in a position to be able to pay dividend back to government. We are looking at state-owned enterprises of capital of almost 39 billion. If you are able to have at least maybe 10% of return of that, here you will not actually focus on other areas that we have been finding it extremely difficult to mobilize resources. And I think that is where the Ministry of Finance is actually pushing, and that's where also we are giving all the necessary support to the State-owned Enterprise Commission to be able to make the needed improvements in those sectors. But I understand the frustrations, but it is going to take time. All that I can ask for is patience for us to be able to get this right, because we are not in a position to get it wrong. And that's the whole idea. We need to get it right so that at least we're in a position, because in order for you to be able to give these sectors resources for them to operate, you need to have those resources come in. And one of the areas is to make sure the SOEs are paying dividends to government. Thank you.
Chair. Yes, I think I quite agree with the forerunner and then what the ministry is doing, or the government as well is doing in ensuring that we bring sanity to the SOE itself. Because I remember 2018, about even GEC, we had to end up paying for the loan because they could not pay. $423 million that we had to pay for them, they could not pay. And it was part of the supplementary appropriation. So the same thing applies to now when some of them they're able to do, and it's had to be translated into 30-year bonds. And that's the reason why I think the SOE Commission, when you look at their report, actually you see that there is some turnaround. They are moving in the right direction. But to continue to do this is really very difficult of any government. And besides, the subsidy also we give to the electricity and stuff like that. And, these are things that really it cannot help. And it's going to take a real strain on the finances of government. So, but I'm glad that we are turning around just to make sure we're going in the right direction. But we need to keep it up and also just to push more because you sit on almost like close to 40 billion on assets. And this asset aren't able to give you anything. So I think that's a real disaster. But now that they are turning around positively, so I think we need to push and help them to ensure that they are all positive. I think we can go here.
Thank you very much.
5:01.
It's time for prayers, right?
So I'm going to sit in until tomorrow.
No time. 10 a.m. National Assembly time or 10 a.m. Gambian time?
I move that we adjourn until tomorrow 10 a.m. Aye.